Bloomberg Business Week. Check out the new issue of Business Week. It is the equality issue.
March is Women's History Month, and every day this month we are celebrating significant moments in women's history. Now with your installment for Thursday, March 17th, here's Bloomberg's Renita Young.
On this day in women's history in 1969, Golda Meir is elected as Israel's first female prime minister. She was only the country's fourth prime minister. Meir began her career as a Zionist labor organizer. Later on, she held several positions within the Israeli government, including Minister of Foreign Affairs and Minister of Labor. And upon the sudden death of Prime Minister Levi Eshkol in 1969, Meir was chosen as his successor. During her career, Meir gained a reputation as a savvy diplomat. She saw the country through the Yom Kippur War in 1973 after Syria and Egypt launched a surprise attack on Israel. And partially due to her ailing health and age, Meir resigned in October 1974. That's today in women's history. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for today in women's history. Well, coming up next, it's our countdown to the close with our friends at Bloomberg TV. We're going to take a look at the markets.
Yep, and stocks right now pretty much hovering near their highs of this session, building on yesterday's gains. This is Bloomberg.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left in the trading session. Romaine Bostic, Taylor Riggs, Shanali Bastick in for Caroline Hyde today. And we are joined now by our regular colleagues, Carol Massar and Tim Stenovic. We welcome in our audiences across TV, radio, and YouTube. And Carol, third straight day of gains here. First time we've actually seen this going back really to the end of January.
Yeah, it's interesting to see the enthusiasm and the risk on trade that we've seen, especially coming off that Fed meeting. You know what's not participating? Bank stocks. They're doing better overall than the broader market this year, but not today. KBW Bank Index down about 0.5%, and that's got to play into, and I know we'll talk about this later, but concerns as the bond market really prices in a higher risk of recession. So maybe some nervousness there, Tim.
Yeah, and I have to do this. I have to go to China and check out the Crane Shares CSI China Internet Fund, down 7.6%. KWeb US, look at that, down 7.6%. You know, it was up a cool 40% yesterday.
What happened?
So I don't know. I guess after a 40% gain, it's expected, perhaps not that surprising to have a little selling, right?
The live cat bounce? Is that how that works?
Yeah.
There you go.
Oh, okay.
Can we say that?
I don't know. We can't say that. Not around Taylor here. Let's check in here on the broader markets here. The Dow up about 0.8%. The S&P up about 0.9%. The outperformer here on the day, though, that's the Russell 2000 up about 1.5%. But we should point out a lot of that is because of the move higher we're seeing in energy stocks. In fact, when you look at the S&P 500 and the top 10 stocks moving higher on a percentage basis, the majority of them in the energy space.
Yeah, and as you had mentioned, Romaine, we do have a very broad-based rally here. We have most sectors that are in the green, all sectors really here in the green, led higher by energies, consumer staples here, materials, all higher. So those crunches you're seeing in the economy and in the bond market, you're not really seeing in the S&P sectors.
And you talk about some of the tech stocks, of course. We're always dependent on that. When any day we have an update like that, Apple, I guess, doing its part. It's only up about 0.2%, still a major weighting. We should point out most of the other tech stocks up about 0.5% to 1% on the day. That's doing well. You were just mentioning some of those Chinese tech stocks, Tim. The Alibaba down, the ADR is down about 3% here. Of course, coming off a phenomenal day yesterday, the biggest one-day gain that we've seen since the market debut of that stock here in the U.S. back in 2014. And interesting, Capital One. There was interesting downgrade here today on Capital One, and this has to do with the risk of recession. The idea here that this is real and this could weigh on a lot of these financial stocks, on a lot of these bank stocks. And we got to mention Netflix. We kind of missed this yesterday, guys. But Taylor,
I know.
apparently
I don't want to talk about it.
You're going to have
to get your own account. You're going to have to get your own account, Taylor. You're going to have to start
Netflix
Netflix needs
off.
the money. Netflix needs that $6.99 or $8. What is it? $8.99?
I think they just upped it to.
Okay.
But they're
$8 or
only testing this
$9.
out. They're only testing this out in 3 countries right now,
Yeah.
right?
Testing.
Yeah,
Right.
testing.
Just to see what the backlash is there in the smaller countries before they drop the bomb on you.
I cannot believe that you're actually going to cut me off. Okay, we'll
Yeah,
see.
sorry.
We'll see how our chemistry continues on air after you cut me off from Netflix, Romaine. All of this, though, you talk about some of the big tech, you talk about the banks, Carol, as you were earlier, really comes down to, well, in many cases, the shape of the yield curve and the flattening. I think what was interesting, we've talked a lot about the 2s, 10s at just below 25 now. The 2s, 30s, though, also really interesting one to watch. You're looking at about 54 basis points or so. Yesterday, we talked a little bit about the 5s, 10s and the 7s, 10s that had briefly inverted as well. So it's always sort of a sign that there is going to be a flattening yield curve. Doesn't always mean that a recession follows, though you are hearing more, Carol, from the chorus that the Fed may not have that room to tighten 6 more times because of what this yield curve is telling us.
Well, anybody who thinks that we know exactly what the Fed's going to do this year based on what they said yesterday is crazy, because who knows what's going to happen between now and then. I'm just going to put that out there. In the meantime, Lawrence Boone, the OECD chief economist, was on surveillance earlier talking about growth forecasts, talking about inflation projections. And what she said, what's interesting is she talked about, the role that fiscal policy has to specifically place when it has to do when it comes to inflation. Here's what she had to say.
This is a moment for fiscal policymakers. What we are seeing now is a hit to consumers of energy and also of food, and that needs to be addressed with fiscal measures. We recommended means targeted temporary measure to actually soothe the bill for the poorest household, the lower income and lower middle income class people.
Okay, of course, that's Lawrence Boone, OECD chief economist. She did say, though, that the Fed is moving in the right direction, but this gets to something we talked about yesterday, right? About whether the Fed has all the tools in place to maybe deal with some of the strains on the economy, Tim.
You know what is interesting from a fiscal policy perspective here is the idea that has been bandied about a little bit is the idea of a holiday for gas tax, right? And that's one thing in the United States that politicians have talked about that really, hasn't come to fruition, and that could be on the table.
Yeah, I'm not sure how much of an impact that will have, but I am curious when I hear people, and I saw the interview earlier with Lawrence, and when you hear people talk about fiscal policy, you have to ask yourself, what's the political appetite now for that? I mean, here in the United States,
we can't even get infrastructure
and
all
you're
the
heading
way
into
done.
But
an election season where the Democrats.
But also,
have to
couldn't it be to a certain extent inflationary if it's not targeted very well?
Some say the past fiscal policy is part of the reason why we're in the place where we are right now.
Yeah, really interesting as we tie in fiscal to monetary and the baton that has been passed. And now, Shanali, the baton that the Federal Reserve, at least from the monetary policy perspective, has gotten, and now the need to tighten and bringing us back, well, to eventually maybe 6 more this year.
Yeah, and I think this is really important. You guys were talking about the banks, bellwether of the economy. The thing is, rates rising is not all good. Their trading books can be impacted. They could lose some money there as well. And to your point, Taylor, that's that yield curve, that flatter yield curve is just no good.
Did you guys see Lloyd Blankfein came out, senior chairman over at Goldman, says the projection of 7 quarter-point rate hikes from the Fed this year is not so hawkish, given that real interest rates are still negative to the horizon. He said Fed policy by itself less a tailwind to the equity market, but not a headwind.
It's interesting too. I mean, we've had so much commentary on Bloomberg television, and some of the language that people have used to describe how they feel about the Fed's decision yesterday and why they don't think it was enough. They think the Fed's behind the curve. I thought, it was Karen El Tambo over at Bridgewater, I think, called it this magical scenario right now that the market is pricing in, where the Fed is somehow going to be able to lift rates 7 times this year without tanking the economy.
Well, hard to argue against Jay Powell in many cases.
What's Lloyd Blankfein up to these days?
He is a retired CEO. I think he says that on his Twitter handle. But in all seriousness, guys, one of the favorite trades I'm hearing out there is shorting treasuries, honestly. Like, that is, the smartest thing that people seem to be able to come up with now. So, I don't know.
Yields continue to move higher, Carol. We're up an additional 3 basis points, trying to get to a 250 on the 30-year.
It does feel like the Fed thinks it's going to be a Goldilocks scenario. Anyway, we've got lots more to talk about.
Maybe they're right, though.
And maybe, right? Time will tell.
Yeah.
How many times do we say that, right? All right, we're going to be back, though. Speaking of time.
Hindsight is undefeated.
Speaking of time, we'll be back in less than an hour's time. We're going to continue our cross-platform coverage on TV, on radio. We'll be back for Beyond the Bell, taking you down to the close on this Thursday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So I think safe to say, it's interesting. I'm looking at the Bloomberg Markets Live blog, and one of our editors, Heather Burke over in London, saying, S&P 500 recovery won't be smooth sailing. Stocks are trying to use a hawkish Fed to stage a sustainable recovery and face many challenges. I think it's safe to say, just like the Fed, let's go, data dependent. Who knows exactly how this year will play out? Do supply chains get better? Do demand and supply come, more in a line, more to a kind of neutral level? Speaking of neutral levels that the Fed is trying to achieve with policy, I don't know.
Well, this is what's interesting about what you said earlier, Carol. You said that anyone who thinks that they know what's going to happen for the remainder of the year is crazy when it comes to the Fed and at least the projections. Just think about the changes in projections that we saw, the difference that we saw from December until now.
Right.
And now we're trying to get an understanding for what inflation is going to look like at the end of this year, when 3 months ago, 4 months ago, the projection was so different than it is now?
Exactly. I mean, right now we know we have a tight labor market. We do have growth. We do have high inflation. We do understand where a lot of this is coming from. But I'm wondering, I'm curious about the labor market. Is everybody back to work that's going to go back to work?
No, Powell did say he would like to see an uptick in labor force participation.
Okay, so we're not quite there,
yeah.
Right? But if we're going to have higher rates, we've talked about higher rates bring higher unemployment. So what's the appetite for how hot do we let, or how tough do we get, how high do we let that unemployment rate get before we start to feel uncomfortable with that? And that starts to impact growth and demand.
He even said he was uncomfortable with the tightness of the labor market yesterday.
It's any CEO, I ask a question, what's on your mind, what keeps you up at night? It's labor.
Yeah. Wow.
Keeping workers and attracting workers.
Well, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by in our 99.1 newsroom. Hey, Nance.
Thanks, Tim. President Biden will be discussing the situation in Ukraine with Chinese President Xi Jinping tomorrow. And Secretary of State Antony Blinken says Biden will warn Beijing not to provide military aid to Ukraine. Blinken says Biden will make it clear China will pay a price for any such support. As for the war itself, Pentagon spokesman John Kirby says Ukraine's forces have Russia bogged down.
They're using their superior knowledge of the terrain and their own geography, as well as their nimble behavior in terms of using these systems they're getting quite effectively, and they have essentially stalled the Russian advance.
John Kirby at the Pentagon spoke with Bloomberg's Maria Tadeo. President Biden pledged another $800 million in military aid to Ukraine yesterday, including anti-aircraft systems and drones. WNBA star Brittany Griner will stay in a Russian jail for at least another 2 months. The 7-time All-Star center with the Phoenix Mercury was detained last month on accusations that she had hashish oil in her luggage. Griner is one of a handful of women who play with Russian teams in the offseason. Lindsay Gibbs with the sports podcast Burn It All Down says Griner's management is trying to keep her arrest out of the headlines.
The fear is that if turning this into a big political story is going to be bad for her because of what's going on with Putin, because of what's going on in the world right now.
Podcaster Lindsay Gibbs spoke on Bloomberg Quick Take. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic here on Friday's Eve in our Interactive Brokers studio on St. Patty's Day.
Happy. What are you doing for St. Patrick's Day?
Nada.
Yeah.
Sorry.
Did you hit any of the
no reason
parade
at
on your
all.
way in this morning?
Nope.
Okay, careful
Did
on your
you?
way home. No.
Yeah.
Took the subway.
Green beer for everybody.
We had green bagels at home.
Did you have green
We did.
bagels?
Thanks to a neighbor who's like, a super mom who bought bagels for her family and some other families.
That's really sweet.
In our building, yeah.
That's so kind.
Yeah, it was very kind.
All right, we have no easy segue to this next story. It's on the Bloomberg, and Andrew Cuomo saying today he's open to running for New York governor again and would consider creating his own political party to do it.
The 3-term Democrat resigned in August amid a sexual harassment scandal, delivered his second public address in as many weeks, this time to a group of clergy packed into a small storefront Pentecostal church in the Bronx. Asked if he's planning a run for governor, Cuomo said, quote, "I'm open to all options," and he was asked if he'd consider creating his own political party. He said, quote, "I've done it before. My father's done it before."
Yeah, listen, in recent weeks, Tim and I were talking about this off air. You might have seen it certainly in the New York metro area if you live around here. You might have seen some of the ads that have been running certainly on media. The former governor, who left office with more than $18 million still in his campaign account, has spent roughly $3 million in a blitz of TV and digital ad campaigns aimed at clearing his name and celebrating his record during his decade as governor. It's paid for by friends of Andrew Cuomo, and I think it talks that there have been no charges, I think, really.
Yeah, I've only seen it play on
that
mute.
have come down. You've seen it only play on mute?
Without sound, yeah. I've only seen it play on mute. And it's surprising to it was really surprising to me to see that he's so quickly out in full force after only resigning a few months ago. He decried cancel culture as a, quote, social death penalty and called on his audience to, quote, stand up to the ignorance and the intolerance and stand up to the bullies he sends to cancel culture.
A recent poll showing that 63% of New Yorkers do not want Cuomo to run again for public office. 24% think he should, but it's early.
It is early.
And politics are strange.
Yeah, and what happens with the incumbent now?
Strange things
Nancy
can
Hochul.
happen. That's a good
Kathy
question.
Hochul, excuse me.
This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks higher across the board. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. Another bid for the main U.S. averages here with the Dow currently up 244 points. S&P's gained 32. NASDAQ is higher by 100. The U.S. 10-year yield at 2.19%. Gold is up 13. Oil is also climbing, but Bitcoin trading lower by 1%. Among the main 11 S&P sectors, only tech was in the red, and leaders to the upside in the Dow, Dow Inc., American Express, and Caterpillar, while McDonald's and Microsoft led to the downside. After earnings, Warby Parker rose 3.4%, Signet jumped 7%, and in other news, Delta said they're giving employees a 4% pay raise. Wrapping things up, FedEx reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you, Bill. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the Oracle of Omaha himself, we know he likes to get greedy when others are being too fearful, which may explain Berkshire Hathaway raising its stake in Occidental Petroleum by more than 18 million shares, or more shares, I should say, this week. So let's find out and put it into context of what Buffett and Berkshire are up to. Let's bring in Kat Chiglinski. She's finance reporter at Bloomberg News. She follows all things Warren Buffett and Berkshire and the finance space, along with Justin Zacks, Bloomberg News equities reporter at Bloomberg News, both here in our Interactive Broker studio. All right, Kat, so lay it out for us. What is Berkshire up to?
It's been a busy past few weeks for Berkshire.
They have been that way.
Yeah, they've been all in on Occidental stock. And even this week, Monday through Wednesday, they bought 18.1 million additional shares. So now they have a total common equity stake of $7.1 billion in Occidental. And that's just in addition to the $10 billion in preferred stock and warrants they already owned in the company.
You brought up, can I just say, Tim, you brought up on our planning call, you're like, wasn't somebody, who was just selling?
Carl?
Icon, right?
Yeah. So I saw this and I was like, wait. So I saw this, a couple weeks ago when Icon sold, and I was like, okay, maybe it's time to get out of the energy trade.
Right.
But what is Buffett getting into the energy trade signal, Justin, right now about that it still has room to run? Because it's up, what? It's the only S&P 500 sector that's up this year.
Yeah, it's up. The sector itself's up 30%, while Occidental is up over 95%.
Wow.
And it's the biggest gainer among all S&P 500 components. Halliburton is the next at 55%. So that can just show you. And what's interesting for Buffett is most people think of Buffett as a value investor. You don't think of him as chasing these huge returns. And I think with these recent purchases, Monday through Wednesday, he did wait for oil came down from about 129 into about 95, and he bought back in. But it's a small blip compared to how much it's run. So he must really think that there's still a lot of room for the stock to run, and there's still a lot of value. Meanwhile, other investors who've kind of been in this trade for a while on the reopening, they were looking at from the demand side. They were saying, well, we're reopening all this, and the energy stocks have done so well. So when we came to the invasion of Ukraine,
right?
Now we have a supply issue that's exacerbating the whole thing. But I think a lot of investors are a little bit skittish and saying, well, we don't want to, we've already done so well, but the dynamics have changed so much recently that there could still be a huge amount of room to run on the upside.
It's definitely wacky. Kat, rather, help me out here because I'm looking at Occidental. We just heard from Justin that I do think of Warren and Berkshire as like value plays, and yet it's been on such a tear. What's the strategy here? How does this fit into the portfolio?
Well, I think you can harken back to his Apple stock. Everyone was like, oh, you're getting an Apple too late. And then now you look at the stock, it was a really good bet.
Timing,
so
right?
I think we have to caution ourselves a little bit when we're like, oh, is he getting in too late, or is it, been on too much of a run? But I really think here, Buffett knows the energy business pretty well. Mm-hmm. They have a huge, obviously, power business, but, Greg Abel, his key deputy and his likely successor, they know this space well. They've, been around Occidental for a while, and Buffett and Berkshire are way more of an industrial behemoth than they used to be. And I think he's always on the hunt for an elephant-sized deal, and who knows, if he's...
Would he buy? Who knows?
Yeah, we don't have any confirmation by any means.
Okay.
But...
Sorry, I'm not trying to start rumors.
It's a big company, and, I think Buffett's always on the...
$54 billion market cap.
Yes. And I think Buffett's always on the hunt. So I think we shouldn't ever rule out,
he's got cash.
Yes. He has nearly 150 billion to put to work, and I think there's a chance that he keeps going after the stock and it becomes a really good bet for him, like Apple, obviously, has performed well. But I also think he wants to get close to some big companies.
And I think about, listen, we are all going back and forth every day about alternative energy, fossil fuel world, right? Like we understand climate change and the push away, but we also know, right, Tim, that it's going to be a while before you can fully make that pivot off of fossil fuels.
It is, but Justin, I wonder how crowded this trade is because we saw the way that oil bounced back to about $100 a barrel yesterday. It's higher today. But on Quick Take Stock, we talk a lot about the retail investors getting into the energy stocks over the last week, and I'm wondering what your data tells you, what your reporting tells you about how crowded the trade is.
Well, it's not as crowded as you might think. Bank of America reported recently that active fund managers are still 30% underweight the sector. And the other thing to look at, this trade is really a trade on oil. Occidental had been hedging their oil positions up until the end of last year, and they let those hedges roll off. So now, if the price of oil goes up, they're completely exposed. And what will happen there is that the oil producers have less incentive to produce more. They want the price to go higher, and that will push the price higher in addition to problems of supply constraints and labor shortages.
Hey, Kat, in terms of Berkshire and Buffett's biggest holdings, this is not the top, but
number 8 in terms of their common stock bets. And that's sizable, given that they, at the end of the year for 2021, they didn't have a single common stock holding in this company.
What are other energy bets, if any?
Wait, say that again?
They didn't have any common stock
of
Occidental at the end of the year. They did have they have
big ramp up.
Position, yeah.
Yes, it's a big recent ramp up, and he's even said publicly he really liked the CEO's last earnings call, and so I think that he's signaling that it's not just an in and out play or a simple market bet right now. Although obviously Berkshire can and might change his mind.
Run by a woman. Yes, just gonna say that.
Other energy bets, Kat?
Chevron is one of the big common stock holdings. So Berkshire's exposed in general to the the oil market, and then obviously they own their own energy business. And I think to your point earlier of, he is really into this idea that it's going to be a long time until we really see sort of this renewable energy kind of dominance. And Berkshire Energy is doing a lot in that space, but I think, he's willing to bet on these companies that may be still very tied to oil.
And, as we were talking about the war, I mean, you see the world rethinking about where they're getting their energy from. And there was some headlines just about, the moves France is making, and everybody's rethinking about it and their exposure and their vulnerability. Guys, thank you so much. Really appreciate it. Kat Chiglinski, finance reporter at Bloomberg News, along with Justin Zacks, Bloomberg News equities reporter here in the studio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Having a little cough attack.
That sometimes happens. Do you need some water, Carol?
I have water, but it's just a little tickle.
Not that I can actually leave and go get you some. Hey, Kriti Gupta is going to be joining us in just a couple of minutes. She's going to give us her chart of the day and also what she's got her eye on.
Yeah.
You know, I didn't look ahead this time. I have to be honest.
Me neither.
I don't want to. I don't want to know. I want to be surprised. Yeah, exactly.
All right. In the meantime, let's see what surprises Charlie Pellet has for us. Any surprises?
Yeah, indeed. I got a chart of Guinness sales on St. Patrick's Day.
Wow. What does it show?
It shows they're going up, 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 just like the stock market. A lot of green today.
Doesn't sound scientific.
It doesn't. It's my own personal research on company time. Yes, here's what's going on. We have got the S&P up now by 36 points, up by about 0.8%. The Dow pushing higher by 266, up by 0.8. NASDAQ advancing 121 right now, up by 0.9%. 10-year yield 2.20% there on the 10-year. 2-year 1.92%. Stocks climbing in a volatile session. We're looking at a post-Fed rally today. Also keeping an eye on oil. That's a big story today. WTI, West Texas Intermediate, up 9.1% right now. Barrel of Brent also up by 9.1%. Brent, of course, the global benchmark. Gold up 0.5 right now, $19.37 the ounce. Right now, we have got stocks rallying, as I mentioned, with the Dow, the S&P, NASDAQ, all climbing today. The humanitarian tragedy in Ukraine is being complicated by COVID as Ukrainians flee the country. Dr. Chris Beyer is a professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health.
Ukraine also was undergoing a public health emergency in December and January and up to the invasion of polio. There were a number of cases, and they were attempting to immunize about 140,000 children against polio when Russia invaded. So that polio campaign has been suspended. And in these kind of crowded conditions, poor hygiene, not enough fresh water, people crowded into train stations and buses and shelters, that is, of course, a terrible setting for polio.
And Dr. Chris Breyer with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking the vaccine stocks, Pfizer up 1.9% right now. ADRs of BioNTech pushing higher by 1.1%. ADRs of AstraZeneca up 2.6%. Moderna now down by 0.8%. J&J Johnson & Johnson up by just about 1%. This headline from the Bloomberg Professional Service: the House has voted to revoke normal trade status with Russia. Recapping equities advance, S&P up now by 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we do each and every time at this, each and every day at this time, we check in with Kriti Gupta from Bloomberg. You can sign up for Kriti's chart of the day. You do that at kgupta129 at bloomberg.net, and check out her Twitter and Instagram at Kriti Gupta News. She's got her chart of the day and also what she's got her eye on today. Let's start with the chart of the day, Kriti. What's on the agenda?
Yeah, Tim, quick question. Have you memorized my email address yet?
I have. Yeah, I actually have. But you know what? Our fantastic producer, Paul Brennan, does remind me of it.
It's the 129 that's a little tricky.
I know.
Kriti.
We got to get why can't we just get
her?
our Kriti charts at Bloomberg.net or something? Or Kriti's chart.
Come on.
Yeah. I don't know the right people
I'm
yet.
trying, man.
Okay.
I'm not important enough yet. But my chart of the day basically shows something that I'm kind of nerding out on a little bit. You know, when something kind of crazy happens in the market, I immediately go and look at if it's happened before all the way back in history. And I mean, the idea of commodity shocks, which is really what we're dealing with right now in the markets and the underlying economy. This is not a new concept. It has happened before. It happened in the 90s with the Gulf War. It happened in 2008 before the financial crisis. But what I wanted to know was, sure, commodities go up and down. They're extremely volatile, but does it actively hit the stock market? Does it actively hit the economy in a really sizable way? And the way I decided to kind of look at this was look through financial conditions. Bloomberg has a very handy financial conditions index for the United States. It basically incorporates things like the dollar, the stock market, corporate bond spreads, interest rates. It kind of bundles it all together in a really nice little index. So I looked at that and I kind of overlaid it with some of the historical time periods we're talking about. So the 1990 Gulf War, which we know was the Iraqi invasion into Kuwait, essentially took some of that oil supply off the market. In 2008, when inflation was so high, driven by oil prices and food prices, by the way, which is a really important part of the conversation now as well. Well, both times, they didn't necessarily immediately lead to a stock market crash, but they did lead to tighter financial conditions. And this is a big deal because it means that access to credit, the access to easy money kind of shrinks a little bit, and it makes people just a little bit more uncomfortable. So something you've probably been hearing in the last couple of weeks as you see this market sell-off is there's less liquidity. It's not as easy to get the spreads that you want, to get the investments that you want. And basically I was comparing this more recent volatility to what goes back in history, and actually the dip isn't as bad as what you saw in 1990 with the Gulf War. It's actually not even as bad as what you saw in 2008. And by the way, I should remind you that those financial conditions tightened way before Lehman Brothers collapsed, and you saw that really ugly drop in the stock market. So I thought that was interesting. Commodity prices basically front-running the market in some ways.
So net takeaway is what then for our audience?
Well, our net takeaway is that commodity shocks are important, surprise, surprise, but that they can have very long-lasting effects. So just because you see this kind of 3-day rebound in the stock market today does not necessarily mean you're not going to see the impact in the longer term. So basically, it's kind of a warning to keep your eye on those commodity moves.
All right, well, speaking of keeping your eye on something, your Ion story today, what's caught your attention is all about cryptocurrency. So let's shift gears a little bit, because a big part of the conversation over the last few weeks, as the international community has slapped sanctions on Russia, has been, are we going to see a way for wealthy Russians to get around sanctions through cryptocurrency? And our own Matt Robinson has a story out this afternoon that says we're not necessarily seeing that, at least according to crypto experts.
Yeah, those crypto experts say no evidence of major Russian sanctions being dodged, basically. And this is really important to me because I think you see a lot of that conversation, right? That, if you are not going to use the dollar and you're not going to use the euro, well, you might as well just use cryptocurrencies. And especially as we start to see a lot of donations, a lot of flows going into Russia and Ukraine during this crisis actually happen in cryptocurrencies. I thought that was really interesting. But I'm going to read a quote that I thought was the best part of the story from Michael Mosier, a former acting director of the U.S. Treasury's Financial Crimes Enforcement Network. He said, you can't flip a switch overnight and run a G20 economy on cryptocurrency. There just isn't the liquidity. And I think that's really the takeaway of the story.
All right, good stuff. Hey, thank you so much. Kriti Gupta, Bloomberg Markets correspondent, joining us on the phone. A headline crossing, the U.S. House voting to revoke normal trade status with Russia. So we continue to see moves to really further isolate financially and economically Russia because of their invasion of Ukraine and the subsequent war with Ukraine.
Well, coming up next, we are driving to the close and counting down to the market close.
Are we driving in an EV?
I'm not yet. Are you?
No.
Probably with gas prices, I should be.
Yeah, probably.
All right. This is Bloomberg Radio. Let's get to Washington, D.C. for check latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. This just in, as you mentioned, the U.S. has voted to revoke normal trade status with Russia. The Senate is expected to quickly take up the same measure. President Biden asked lawmakers to take the action, ramping up the pressure on Ukraine. Efforts continue, meanwhile, to end Russia's war on Ukraine, and President Biden plans to ask Chinese President Xi Jinping tomorrow to help with the effort.
Secretary of State Antony Blinken said he's keeping tabs on the negotiations.
I have not seen any meaningful efforts by Russia to bring this war that it's perpetrating to a conclusion through diplomacy. I don't see signs right now that Putin is prepared to stop.
Blinken said the allies are continuing to pour weapons into Ukraine's defense in the hope of strengthening Ukraine's hand when negotiations do get serious. In Washington, Irv Chapman, Bloomberg Radio.
The Kremlin says talks of any progress in the ceasefire talks is wrong. Pentagon spokesman John Kirby says it's more than obvious Russia's actions speak louder than words.
There's ceasefire talks going on, and of course we support that, and we want to see a negotiated settlement. That's the way forward here. But what you're seeing by the Russians on the ground is a full-on commitment to military operations.
Speaking with Bloomberg's Maria Tadeo, John Kirby says Ukrainian forces have essentially stalled Russia's advance and are using weapon shipments from allies very effectively. Former New York Governor Andrew Cuomo is dangling the possibility he may run for his former job just 6 months after he resigned amid sexual harassment allegations. Cuomo gave a campaign-style speech today, and when asked afterward if he would run, Cuomo told reporters he's open to all options. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Well, I recently sat down with Land's End CEO Jerome Griffith for Bloomberg Radio and Odyssey. Bloomberg provides business reports for Odyssey radio stations, and thought we would just share a little excerpt from that conversation where he discusses the quarterly earnings for the company. Keep in mind, those earnings had just come out that morning. Here's what he had to say.
Jerome, let's talk about the quarter. There was some initial disappointment from Wall Street. How's the business? What's the consumer doing? What are some of the pressures on the system right now?
If you look back at 2021, actually it was an outstanding year for the company. We had our best revenue year since 2011 and our best earnings year since 2014, which is when we got spun off from Sears. A lot of it was front-weighted. We had some supply chain issues in the back part of the year, which kept us out of stock in certain products that customers had high demand for. And we missed some revenue in the third and fourth quarter that we could have picked up. As we come out of 2021 and into 2022, I still feel very bullish about the company. And we laid out in January what our 5-year plans look like. We're looking at a 10 CAGR top line. We're looking at going from about $1 a share to about $5 a share over the course of the next 5 years, and I feel good about it. There are some transitory issues still that haven't been resolved. The supply chain issues that you've seen, whether it be higher costs or product getting in late, still is there. It's getting slightly better, and we are in a position today where we're slightly ahead of last year with our in-stock position, which is good. But you've still got all the front loading of costs that aren't really subsiding yet. And then with the increase in fuel prices and the increase in other commodities for customers, we're somewhat concerned about what the first half of the year looks like. But having said that, we feel very bullish about the second half of this year, and we think that things should come back.
And that was Land's End CEO Jerome Griffith. We'll have more of that conversation coming soon on Bloomberg Radio and our Odyssey Network affiliates. We talked about a lot of stuff. By the way, that stock, despite some some disappointment early on from those earnings, stock's up almost 30% in the past 3 days.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sudden move higher as we head toward the closing bell. We've got 13 minutes to go before that bell clangs here on Wall Street. S&P on track for its biggest three-day rally since November of 2020. Right to the numbers. S&P up now. High of the day up by 50 points, up 1.2%. The Dow up 364, up 1.1%. NASDAQ is rallying 171 points right now, up 1.3%. The NASDAQ 100 index up 1.1%. Broad-based rally today with the Russell 2000 taking part as well, up by 1.6%. 10-year yield 2.19%. 2-year yield now 1.93%. Gold is advancing 0.5%, 19.37 the ounce. And West Texas Intermediate crude, big move there, up 9.1%, 103.68 a barrel. So the day after the Fed decision, big rally underway with the S&P up now by 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
What done to mitigate the short-term inflationary pressure from mounting energy costs? The challenge is to moderate the upward pressure on short-term prices without making fossil fuels more attractive in the long term. Ideally, planned supplies would be delivered sooner, not persistently raised. The Strategic Petroleum Reserve can help. On March 1st, the U.S. announced it would release 30 million barrels of crude from its stock of 580 million. Releasing stocks into the economy alleviates the short-term disruption. But this can and should be combined with so-called exchange agreements, advance commitments to restock later, which would take supplies off the market and reassure producers that until the reserves are replenished, there'll be sufficient demand to justify a temporary increase in output. Such arrangements help to stabilize both prices and production. The stresses caused by the Russia sanctions will likely be long-lasting and tough to manage. This more ambitious use of the petroleum reserve could make a difference. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 10 minutes left in today's trading session. You heard Charlie breaking down the numbers. We see equities building on yesterday's gains. Really some outperformance. Well, I guess actually it's about 1% higher, as Charlie mentioned, on the S&P and the Dow and the NASDAQ. So let's get to it. Vance Howard is in the house. He's portfolio manager, CEO at Howard Capital Management, roughly $5 billion in assets under management. And he's here in our interactive broker studio. So nice to have you here with Tim and myself. Nice to have you in studio. How are you?
Well, thank you. Thank you so much for having me. It's a thrill.
Well, it's great to have you here. Also thrilling, depending on the day, are the markets.
Yes.
A lot of volatility. And it's interesting to see the reaction coming off of the Fed meeting. How do you see it? What's the outlook here for equities in particular?
Well, you know, Carol, we're in a downtrend. So our proprietary indicator, the HCM byline, is still negative. So we're holding about 35% in cash right now. And there's
all your funds?
All my funds across the board. My two ETFs are 50%.
What do you normally hold?
Usually we're 100% invested unless the HCM byline's negative. Now, if the HCM byline's negative, we pull money off the
What does
top.
that byline look
Explain
like?
HCM byline.
HCM byline is our proprietary trend indicator.
HCM byline.
HCM byline is our proprietary trend indicator, and it tells us, it doesn't fire off a signal very often, but it fired off a negative signal on January 19th of this year. So we were pulling money away from the markets and just sitting it out and letting the market.
What is it looking? Oh, it's proprietary. Can you give us a hint? What is it
Well,
looking
it's just a good, solid intermediate term trend indicator. Basically, it's very, very, in my opinion, it's the best one ever built. I built it back in the 90s. We've never, ever sat through a bear market in the history of Howard Capital. 2002, 2008, we were 100% in cash. During the height of the pandemic,
Nice.
we were, yeah.
That's called capital preservation.
It is. Yes.
I want to learn more about this, the HCM
Tim's like, how
byline.
can I put my money? No.
Well, no, I want to learn more about it because, you know, if you built this in the 1990s, ostensibly you'd be adding different signals to it as the data gets better and you get more sources of alternative data.
Oh, Tim, we used to run this thing on a Big Chief tablet with pen and paper.
Yeah.
And now it's computer driven. And now we've got 7 computer programmers working on it 24/7, trying to make it better and better and better. So, during the height of the pandemic, we were 60% in cash when the market was bottoming out.
How do you know when to get back in?
That's the great part. What we built it is to be slow to get out, but very fast to get back in. Because what I'm trying to do, Tim, is I'm always trying to catch the curve of the turn of the market.
Yeah.
I'm not so much, I can't call a top or bottom, and we're not doing that. I just want to stay in 85% of the good and out of 85% of the bad, and I'll have a much more smoother ride with higher returns.
And we are not yet, your argument is that we're not yet to buying into that curve when the market's going to start going up again, despite the fact that this is the 3rd day in a row of the S&P 500 rallying.
Yeah, we're not there yet. No, the trend's clearly down. It's sometimes you get a dead cat bounce. I hope the bottom's in. There's a good chance that maybe we put the bottom in February. Who knows? Maybe that's what this is. And I was so glad just to get a rally.
We did, Carol, you were off that day. We called that a dead cat bounce.
Darn it.
Yeah.
Hey, the methodology hasn't changed, though?
Oh, it's always evolving because, you can't stay static. The markets are faster now than they've ever been.
Yeah.
You're not trading against, the three of us aren't trading against one another anymore. We're trading against a computer. So you're going to have to get faster and faster. Everything we do has to have a quantitative edge to win.
Right.
And you got to be fast anymore. And you can't sit there and be in the guessing game. You got to get in the odds game like we are.
All right, so I mentioned you've got a bunch of funds, your Tactical Growth Fund and Dividend Sector Plus Fund, each beating just about all of its peers in its category over the past 3 years, putting them in the 98th and 99th percentiles respectively. Tactical Growth Fund returning on average 25% annually, according to our data. Dividend Sector Plus Fund returning 22% on average annually. That's not too shabby.
Yeah, thank you.
You're welcome. So, okay, so what is your, what is it showing you now? That are you putting money to work? Or
We are not.
You're still, are you still pulling money out?
We don't ever buck the HCM byline. It's negative. We're going to sit on our hands and sit in cash, period, until it gives us a firm signal to go long again.
But could that cash position grow?
Yeah, it could, yes. If the byline continues to get more negative, it would grow. And we have been as much as 100% in cash. Like I said earlier, we were 100% in cash in 2008.
Okay.
But during the pandemic, we were only 60% in cash. But it felt pretty good the day the Dow was down, I think, 12, and we were down 3. So that was a pretty good feeling.
Okay, let's talk. You had something, Carol.
No, I'm trying to figure out, so you're watching, so you're in cash. You could go into more cash, which is why when we talk about dead cat bounce, we've had a lot of not questions, but a lot of debate about, is this it? Have we hit the bottom? And hard to say. Did anything change in terms of your metrics or your indicator off of the Fed meeting?
No.
No.
The trend was clearly down, still down. I would still be sitting in 30% cash. It had no effect other than the fact we're getting a rally, which I'm glad to have.
Well, this 2-day rally, I mean, does it make you say, I want to put some money to work?
No, not until the HCM byline. That's part of being disciplined. The discipline is the key to winning in this game.
So
if you're not disciplined, you lose.
You're flying, you're an instrument-rated
There you go.
pilot, right?
There you go.
don't care what you see in front of you. It's just what it says.
Is the HCM byline, is it binary, like negative or positive, or are there different degrees of it? And
Different degrees, and that's a good point. We do have 3 different stages, and one, so we tier out. We don't play the all or none game. The only time we've been 100% in cash was 2008. And that's when that is a quantitative. It's not more. It's more fundamental. When the banks are imploding, we're out. We're just out. We're not anywhere near that now. This is just a garden variety correction, and it may be turned into a bear market. It may just be a nasty little correction. I'm just not that worried about it. By the way, we had 3 great years, right? So to have a bad quarter, so what?
Here's, Tim and I talk a lot off air because I know you're not supposed to time the market, but I mean, after a year like we had last year, I feel like, yes, you could kind of time the market and pull money out, because even if you had a great year, why not take a breather and see where this goes? Are you saying yes or no?
I'm saying that I'm saying I follow the HCM byline. If it was still positive, I'd be 100% in right now.
You would be.
Yeah, but it's not, so I'm negative. But it's creating a vast amount of great buys, Carol. I mean, I'm sitting in 30% of cash, and some of these stocks are off 50, 60, 70%. Think of my gunpowder coming back in.
Well, does your indicator play for individual stocks? So that
Absolutely, it does.
So
sectors mainly.
Okay, so might you put money to work in some sectors?
Yes, I would.
Any sectors you want to share with us?
Tech.
Tech. What kind of tech?
And the semiconductor index. Well, you can look at all these tech stocks. Look at I would consider Salesforce tech company. They're beaten to death. PayPal's looking great. Microsoft is a screaming
buy. What about
Facebook? Once it turns.
Tim, how much is
Meta platform's down 50%, roughly 50% from its highs.
But don't buy it until the byline's positive, because don't fight the trend.
Is the byline positive on Meta?
No, it's negative. It's negative, negative, negative. As long as the overall byline's positive, we won't buy. Now, once we do have a buy signal, then we can start to pick out what we're going to own.
Has the byline ever been wrong?
Of course.
And then you make
I can
changes
tell you
to
exactly
it?
what it is. The buy line is wrong about 26% of the time. It's right about 74% of the time. I can tell you what your odds are of winning. When the buy line's positive, your odds are 73% of it going higher, 27% that it's not. When the buy line is negative, your odds of it going down to negative are 73%, and your odds are reversed at 20. So I'm not going to take a trade when the odds are only 27% that it's going to move higher, because the trend of the market moves 4 out of 5 stocks the direction of the trend.
All right, so come back and let us know when it goes either
I will.
positive or more negative. We
Love to
wanna
share
know.
it with you. Love
All
to
right.
share it with you.
Look forward to it. Safe
Thank you,
travels
Carol.
back home. Vance Howard, portfolio manager, CEO at Howard Capital Management, joining us here in our Bloomberg Interactive Brokers studio. Just a few minutes left in the trading session, and we've got stocks just off their highs of the session. Right now, we're going to head over to our TV team and get ready for Beyond the Bell live on Bloomberg Radio, TV, and YouTube. We're counting you down to the close on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Rigg, Sonali Bassett counting you down to these closing bells here on this Thursday afternoon. And he'll help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic, bringing together our audiences across Bloomberg Television, radio, and of course on YouTube as well. 3 straight days of gains here, Carol. What do you make of it?
I think it's too soon to tell. We just had a great guest on who was talking. Vance Howard was talking with us, and he's got his own algorithms and specific metrics. He's got about a 40% cash position, and so he is not ready. Maybe some individual purchases, but for the most part, kind of holding back on this market. So doesn't think we necessarily have bottomed out yet.
Yeah, but he made such a great point that after 3 incredible years on the S&P 500, a bad quarter like this is, really, you got to take with a grain of salt.
And is it a bear market, or is it,
correction? Unclear at this point.
Right.
Yeah, it's hard really to figure out what the bottom is here, but one thing's clear, the VIX being that low leaves the door open to raise money again. There is some optimism coming back no matter what.
And it brings up a good point, Sonali, right? With maybe some of the biggest headwinds behind us. We just had Sherry Paul on, of course, talking about, well, maybe the geopolitical headwinds, those are still going to play out. But when you think about inflation, we really finally got confirmation that this is a Federal Reserve that is going to take inflation seriously. They're going to move, and maybe there is some relief to that.
Well, but is everyone in the market actually on board with that vision? The idea here that they are taking it seriously. Some people said if they were taking it seriously, we would have gotten 50 basis points. If they were taking it seriously, we would have had a balance sheet
Jim
announcement.
Bullard, right? You would have done 50 basis points. Maybe that would have been a little bit more serious, right?
Yeah,
Romaine?
so still a lot, absolutely. Still a lot to sort out here. But right now, look, there is enthusiasm in this market. Risk sentiment is certainly higher here. 3 straight days of gains right now for U.S. equities. The Dow Jones Industrial Average going to finish the day higher by about 1.2%, or roughly 417 points or so. The S&P 500 up about 1.2%, or roughly about 53, 54 points. We should point out that as far as it being in correction territory, remember, it pulled out of correction territory at yesterday's close, now down about 8% from its all-time high. The NASDAQ still mired in correction, but higher here on the day by about 1.3%, 178 points. And the Russell 2000, that's your relative outperformer here on the day, as a lot of those energy stocks help to lift that index 1.7% higher on the day, Carol.
Yeah, and the Volatility Index, man, it's been volatile itself this year, but it is down about more than 6 points over the last 3 days. And right now we're looking at about 25 and change there on it. So it has definitely come down as well, guys.
And it certainly is, you think about sort of this broad-based rally, Carol, where we're in terms of some of the individual sectors for the radio audiences we do every day, the winners, the losers, 2 sectors down to get a broader based picture of, well, where some of the big movers were. And it looks risk on, right? It's autos, it's energy, it's materials, it's some of the dividend financials. As we saw sort of a re-steepening of the yield curve, they're up anywhere from 1.6 to more than 3% on the day alone. There's a lot of green even in some of the worst performing sectors, but there are a few that ended up in the red. Some of that is banks, but then maybe sort of it's an inflation story, right? Household and products, some of these consumer services with technology a little bit down at the bottom here, but losses are minimal. You're only off about 0.4%.
All right, let's get to some of the gainers. Thank you, Warren Buffett and Berkshire, because Occidental Petroleum up about 9.5%, pretty much closing at its highs. We got news that Warren Buffett snapping up 18.1 million additional shares of Oxy. It's now got about a 14.6% stake. It's 8th largest holding for Berkshire Hathaway. So that's certainly a standout. Guess, which reported after the close yesterday, up near its highs for the session,
Guess?
up about.
Wow.
Yeah.
You still have Guess jeans?
I don't. Do you?
I don't think I ever did.
Nothing wrong with guess jeans.
No, I didn't say there were.
Just check it out.
I just throw it out there.
Okay. Yes.
Okay.
All right. Anyway, up 9%. It does have a large short position, about 22% of float. So there could be some short covering because the company did come out. Fourth quarter miss on the top and bottom line. Revenue up from the year before. They did expand their buyback up about $100 million, which would be a lot of guess jeans. Hey, one other one. We don't talk about it. PD, PagerDuty, up almost 21%. It's a wireless app solutions company rallying. Again, a decent-sized short position, about 11% of the float shorted. The company, though, did come out and reported its fourth quarter results, gave an outlook that is seen as strong, and then analysts like what they heard. They thought that there's some more upside, and several raising their price target on the company. So again, up 21%.
All right, let's get to those decliners. SolarEdge Technologies, it's a solar technology company. Shares finishing the day down by close to 6%, 5.9%. After the company announced a share sale, the company did say that they are going to use the money that they raised for general corporate purposes. It could include some acquisitions, though they haven't decided on anything yet. Shares up about 50% since January, but down about 15% from those November highs. Carnival Cruise Lines finished the day down about 0.9%. The share price of several cruise lines, including Carnival, were cut at Truist. The concerns are weak demand, pricing trends that could seep into the second half of 2022, Romain.
Yeah, and we're waiting some earnings here after the bell, including FedEx. They're crossing the wire right now, looking for the headline numbers, but just going to go forward here with the forecast. The company is providing a fiscal year adjusted EPS forecast, basically maintaining the forecast that it had previously had, $20.50 a share to $21.50. That's the range that they had given before. That still remains roughly above street consensus, which is right now at 2071. As far as the three-quarter adjusted EPS number, again, this is looking forward here. $4.59 a share. The street is looking on average for $4.65. Still waiting to actually see the second quarter numbers. Remember, this is for the fiscal second quarter that ended in February. We haven't quite gotten those crossing the wire, but overall right now, guys, the forecast for the fiscal third quarter and for the full year appear to be in line to above street consensus.
Yeah, and the stock is down about 2.2%. Actually bouncing around, but still down in the after hours, down more than 2%. And this is a stock that was down about 12% in the regular trade before the earnings. But this is an interesting company, right? You want to know about the fuel costs and moving stuff around. It's a good economic indicator, Romain, as well.
Absolutely. Oh, yeah, just to say the least here. Let's get some insight here on the fly from Lee Glasgow, Senior Logistics Analyst for Bloomberg Intelligence, joining us right now. And Lee, obviously I know these numbers are still coming in. Overall, though, we're looking at a company that seems to be trying to maintain its general outlook for the year here, even though maybe the street was looking for a little bit more.
Yeah, I mean, sentiment in FedEx has been pretty negative for the last, I would say, couple of years. You know, as you mentioned, the stock's down around 12% so far this year versus around 3.5% up for its biggest rival, UPS. I think the good news here is that they maintain their outlook for the full year for EPS. Obviously, that is good. FedEx has had a history as of late changing around its outlook, sometimes up, sometimes down. I think what's going to be interesting, at least on the call, is we're probably going to hear from the new CEO of FedEx Express, one of the larger businesses within the group. That's Fred Smith, the founders. His son is taking over. Richard Smith is taking over to run that business. So I think it'll be interesting so investors can hear from him. That's at least my guess. And also, I think we're going to hear from them about what the impact is of this Russia war is on their network. We haven't heard too many companies talk about the dollars and cents of the impact. Obviously, the human toll has been terrible, but we'll hear from FedEx, I'm guessing, on their call in about an hour and 15 minutes, and they're going to talk more about probably the impact of the war, and their outlook going forward. And not only, the impact of the war, but obviously, the inflationary pressures that we're facing here in the U.S. How's that going to impact consumer demand, which is obviously very important to their overall growth.
Lee, can you talk to me about some of those inflationary pressures? They're mentioning in their press release higher transportation costs, higher wage rates, but this is a company, if you think about the pricing power, they have it, do they not?
Yeah, they do have pricing power, whether it's all of their businesses, especially their LTL business, expectations are for yields or revenue per hundredweight, which is how we measure pricing, to increase about 12%. Still going through the release, seeing if they actually made that number. But yeah, they have a lot of pricing power because capacity is at a premium right now, no matter what mode of transportation you're talking about.
Hey, when we think about, Lee, FedEx versus UPS, they're not apples to apples in terms of the transportation model. So what is it that we need to kind of be thinking about as we go through these FedEx numbers in comparison to UPS?
Well, I mentioned the less than truckload market. UPS actually sold their less than truckload business last year to TFI in Canada. So, this is actually a competitive advantage for FedEx because it happens to be a very strong business right now. Other competitors in that field include Old Dominion or XPO, and they're just doing really well because they can be extremely selective about the freight that they bring in, which is increasing their overall rates and margins.
All right, we're going to leave it there. Bloomberg Intelligence Lee Klaskow covers FedEx. That stock now really bouncing around, but just about unchanged. Down about maybe 1.5% here, Tim, in the after hours.
Yeah, one stock not unchanged in after hours is GameStop. Shares down about 9% in after hours trading after the company released its most recent numbers. The fourth quarter net sales met estimates. The company posted $2.25 billion in revenue. Estimates were for $2.23 billion. Adjusted loss per share, $1.86. Estimates for earnings per share were at 84 cents each. The company is saying that it's hired dozens of additional individuals with experience in areas such as blockchain gaming, e-commerce and technology, product refurbishment, and operations. Remember, investors are going to be looking for any detail about that digital transformation strategy. They haven't got many details over the last year. In fact, the last 4 earnings calls haven't actually been earnings calls, including Q&As. They've been relatively short, so we'll be interested to see if they actually take questions on today's earnings call.
Truly contrasting that with AMC, where they answer a lot of questions all the time. GameStop is going to launch an NFT marketplace by the close of Q2 of 2022 as well. NFT sales are down, so let's see how that does for GameStop as well.
All right, just a quick rehash. We've got GameStop down about 7% in the after hours. FedEx down about 3%. FedEx reaffirming its year forecast. All right, that's going to do it for our cross-platform coverage on radio, TV, and YouTube. Beyond the Bell. Catch us again, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Carol Masser live in the Bloomberg Interactive Brokers studio. Worth revisiting some of these earnings. Let's start with GameStop because that's what I'm focusing on, Carol. Down 9% in after-hours trading. The company reporting a wider than expected net loss, though it did meet on the top line. It was actually, we're going to get an update on that in just a few minutes. In the meantime, let's get a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nancy.
Thanks, Tim. There are growing calls from the international community for Russia to stop attacks on civilians in Ukraine. Secretary of State Antony Blinken agrees with President Biden. It appears Russia is intentionally targeting civilians, which constitutes a war crime.
These incidents join a long list of attacks on civilian, not military locations across Ukraine, including apartment buildings, public squares, and last week, a maternity hospital in Mariupol.
Blinken says the U.S. will work to investigate these alleged war crimes. Well, as Russia's war on Ukraine continues, President Biden will be talking with Chinese President Xi Jinping tomorrow about the situation.
President Biden is looking to shore up global pressure on Russia to halt its war in Ukraine. White House spokeswoman Jen Psaki says the meeting is part of the ongoing efforts by the White House to maintain open lines of communication between the U.S. and China. China has aligned its rhetoric with Moscow. Xi and Vladimir Putin said before the invasion that their friendship, quote, had no limits. But China has also said it wants to avoid being impacted by U.S. sanctions over the war in Ukraine. In Washington, I'm Amy Morris, Bloomberg Radio.
The U.S. House has voted overwhelmingly to end regular trade relations with Russia. It's a move that would allow the U.S. to sharply raise tariffs on Russian goods entering the country. The bill passed 424-8 and would end what's known as most favored nation status for Russia, putting it in a category with other pariah states like North Korea and Cuba. Global news 24 hours a day, on air and on Bloomberg. Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in our DC Bureau. So let's get back to earnings. Tim, you were breaking GameStop earnings, and they are down in the after hours, down about 11%.
Yeah, investors reacting negatively after the company met sales estimates. So the top line was in line with estimates, but the company reporting a wider than expected loss, that coming in at $1.86 per share. Estimates were actually for...
It was a buck more.
Yeah, estimates were actually for 84 cents
earnings.
Gain, so more than that,
Yeah,
Carol.
yeah,
Yeah,
exactly.
so it was... interestingly enough, so if we think about
So
what
it's like a
GameStop has
260,
done,
270 difference.
yeah, that's big.
Yeah,
That's huge. The company, well, I want to know what the company's been investing in and why they saw the bottom line like that. But they did announce last month that they're doing this NFT marketplace. Now they're set to launch it. The news today is by the close of the second quarter of fiscal year 2022. And it remains to be seen what that actually looks like. As Shonali mentioned, NFT sales are down. The interest in them, the question is, has it peaked? And what can GameStop actually do with NFTs? And then, Carol, core to this is the digital transformation. Those details that investors want from Ryan Cohen.
What is this company supposed to be going forward?
Well, it's supposed to transform from the company that we all grew up with in the malls that actually sells physical goods in stores to something that is online. And Ryan Cohen from Chewy is the one who spearheaded that transformation. It was kind of the birth of meme stocks. But we don't have much detail on that over the last year. And in fact, they don't actually take Q&A on the earnings calls for the last 4 at least. So are they going to do it tonight?
18%, more than 18% of the float right now is shorted in this stock, and it's down almost 41%. That was before the loss that we're seeing today. Hey, I do want to mention FedEx came out with its third quarter adjusted EPS. It was a miss. It was short, 459 versus an estimate of 465. It did reaffirm its year forecast. Our lead Glasgow saying that was important. Bloomberg Intelligence stock is down though about 2.25%. So we'll see what the company has to say. It has a fair amount of overseas business, so see what the war in Ukraine has potentially done to that and the slowdown that we're seeing there as a result. This is Bloomberg.
Connection lost.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. FedEx posted quarterly profit below analyst expectations. After hours, FedEx shares down now by about 2.3%. Also reporting after the closing bell, GameStop. It reported a wider than expected loss. GameStop shares lower now by 9.5%. Late day rally, the Dow, the S&P, NASDAQ all closing at or near session highs. Volatile day, but the S&P did notch its biggest three-day rally since November of 2020. S&P up today by 53 points, up 1.2%. The Dow was up 417, up 1.2%. NASDAQ up 178, up by 1.3%. 10-year yield 2.19%, two-year yield 1.93%. Spot gold up 0.5%, $19.37 the ounce, while West Texas Intermediate crude back above 103 a barrel, 103.39 on WTI, up today by 8.8%. Brent crude up by 8.9%. Recapping, after hours, FedEx down 2.3%, GameStop down 9.5%, S&P today up by 1.2%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate that update. Some news there after hours, as you know. Well, the United Nations reporting that there's now about 3.2 million refugees, probably and counting, from Ukraine. About half or more are children. They're going to Poland, Slovakia, Hungary, Romania, Moldova, and elsewhere. And Tim, more are definitely expected.
Alina Vandenberg is the co-founder and CEO of Chili Piper. It's a software sales scheduling startup. It's working right now to provide essential information and supplies to those who've been displaced by the Russian invasion of Ukraine. Carol, as you mentioned, more than 3 million refugees.
Connection lost.
Just at this point already. Alina, thanks for joining us. How are you?
Thank you. I'm in Manhattan today, and there's fog here, and I feel a little bit foggy inside, but I'm happy to be on the program with you. Happy to chatting with you.
Well, before we talk about what exactly you're doing at Chili Piper, talk to us a little bit about your connection right now, growing up in Romania under a dictatorship, and how you're watching this play out in Ukraine.
So I have the memories of growing up under communism, under the dictatorship, and I can resonate with what the Russian population is going through, in that I've seen my parents and my immediate family being under the influence of the propaganda that was given on live TV and the stories that everybody would hear. So can understand how Putin manages to dominate in the news with the message that this is just a military operation, that he's just going there to save them, and how everybody believes that. At the same time, I was also, my neighbors during childhood were the type of people that would punish those that would speak up against the government. And I was exposed through fearful experiences on what it's like to be speaking out and what it's like to break that chain of command. And it was quite traumatic because my neighbor would sometimes get drunk and he would tell horrible stories of what he would do to people that were not talking good about the dictator. So that's one of the parts that I can relate to. Another one is, once that chain was broken, the dictatorship was no longer in power, there was a lot of fighting internally in the country, and the military was shooting at civilians. The civilians were shooting at the military. It was quite horrible shooting because nobody really knew why they were doing it, and I would assume that it's very similar to the Russian and the Ukrainians fighting each other when they really feel that they shouldn't, because the soldiers on the fields, they don't have the same reasons as their leader does. So it's just blind shooting. But for me, going through that experience where I would have to crawl under a window and be fearful for my life because there were bullets above my head, it was a horrible, horrible experience. And it's what millions of people are going through right now in Ukraine. So I resonate with them quite a bit, especially now that I'm a mom with two children as well.
Right. It's hard not to, especially we talked about the number of refugees and how many, more than half are kids. Alina, You do have employees, right, in Ukraine as well?
That's the other part of Alina, the one that is a business leader. So we built the company that we have so far, and it's a successful company. It's a unicorn, as they call it in tech. And through that growth, we've hired people in all these beautiful places, in Belarus, in Russia, in Ukraine. So it's very painful to see what each one of them are going through in their own separate emotional journey as this horror unfolds.
I think we're all, to be quite honest, still in shock that this has happened, that it's still going on, and wondering kind of what happens next. From someone who has, lived this firsthand, this kind of a situation and this kind of stresses. I mean, what's going on in Europe? I mean, what's the conversations you're having with some of the folks either back in Ukraine or back in Europe when it comes to what happens next?
It's such a traumatic experience. The first reaction is, as you say, is denial, right? That it's not really happening. It's just a threat. It's just saying that it's not real. It's not happening. So the denial is the first level of emotion. The second one is anger. There's a lot of anger, especially when it comes to the Ukrainian people. They feel a lot of anger towards their Russian counterparts.
Do they feel left behind? Do they feel left behind by the rest of the world?
Some do. Some feel like the rest of the world is doing justice by exposing what's happening there. But there's still a very traumatic experience that they're going through because they don't know if the next hour they're going to be safe. And it's not only in Ukraine, but it's happens everywhere else around, not even on the surrounding borders, even further, ripples down to Germany, to Spain, to Portugal. People are starting to prepare for the worst. Their productivity,
Alina,
productivity is completely down.
We don't have a ton of time here, so I just want to make sure that you're able to tell us what you're doing at Chili Piper to help with Ukrainian refugees, and just in 30 seconds.
We have started creating a Google Doc at the beginning of the crisis that was accessed by tens of thousands of people with information of what they can take at the border, which border they should be taking, because some of them are very, very long. Some of them are unsafe. And then as they get to their final destination where they want to seek shelter, what should they go with to find free foods and food and things.
We hope, Alina, we can check back with you again and hear more about what's going on. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, you are listening to Bloomberg Business Week. Got a buddy in the house, a former partner of mine here at Bloomberg Radio, Bloomberg TV.
The OG.
The OG?
Yeah.
What's that?
Jason Kelly.
Oh, boy.
All right, here we go.
That terminology is just going to go right over
All
my
right,
head.
Jason Kelly's going to be with us in just a few minutes. He is chief correspondent for Bloomberg Quick Take. We are talking, of course, brackets for a cause.
March Madness, it's all underway. All right, we'll get to that in just a moment. First up, though, back to Charlie Pellet with a check on the close today.
Indeed. I do want to begin with some headlines from the Bloomberg Professional Service. The U.S. says Vladimir Putin is likely to make nuclear threats if the war in Ukraine drags on. That assessment, the grim assessment, comes from the Defense Intelligence Agency chief. After the bell, we heard from FedEx. It posted quarterly profit below analyst expectations as rising costs relating to a U.S. labor shortage and lower than expected package volume weighed on gains from pricing increases. After the bell, FedEx shares now down by about 0.3%. Also reporting after the bell, GameStop, it reported a wider than expected loss. Shares are falling after fourth quarter results. GameStop now down by 10%. But again, we did hear from FedEx. Shares lower by 0.3%. Lee Klaskow is a senior logistics analyst with Bloomberg Intelligence, and he is awaiting the conference call.
I think we're going to hear from them about what the impact is of this Russia war is on their network. We haven't heard too many companies talk about the dollars and cents of the impact. Obviously, the human toll has been terrible, but we'll hear from FedEx, I'm guessing, on their call, and they're going to talk more about probably the impact of the war, and their outlook going forward.
S&P 500 index notched its biggest three-day rally since November 2020. The Dow, the S&P, and NASDAQ all higher today. In fact, we closed at session highs. S&P up 53, a gain of 1.2%. The Dow up 417, up 1.2%. NASDAQ up 178, a gain there of 1.3%. 10-year yield 2.17%. Spot gold up 0.7%, 19.40 the ounce. Big move for crude today, up by almost 9%. Back above 103 a barrel, 103.53 on West Texas Intermediate crude. Recapping, stocks rally, S&P up 53, up 1.2%. On to the brackets. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, everybody, you are listening to Bloomberg Business Week. Carol Master along with Tim Stanovec. March Madness, it's upon us, which also means it's time for Bloomberg's annual Brackets for a Cause fundraiser. And here with the latest on that, my former partner in crime, my former co-host, Bloomberg Quick Take chief correspondent Jason Kelly.
Can I stay?
I feel like I have my ex-husband and my current husband.
Am I allowed to be here?
It's a little bit awkward.
It's a little bit awkward. You have the kids this weekend. Okay. All right, so tell us about Brackets for a Cause. It's been going on for a few years. It's such a great thing.
Thank you. 7 years in, $3+ million raised, and this year a near record field, 53 folks, 10 grand apiece. Pick a charity, and then the top three winners, the top three finishers at the end of March Madness get to split it among their charities.
All right, who's in it this year? We got Whitney Wolfe Herd. You'll know her as the founder and CEO of Bumble. We got former SEC Commissioner Jay Clayton. Who else?
It's like the perfect cocktail party, isn't it?
It really is. It is really fun when you read down the list, and you can see this at BRKT Go under the Celebrity tab on the Bloomberg. You can also find it on the web if you search Bloomberg Brackets for a Cause 2022. One really fun thing for me, looking at the sports world, is we have a bunch of team owners, whether it's Tony Ressler from the Hawks, Steve Pagliuca from the Celtics. We've got Dan Gilbert from the Cleveland Cavaliers. We have David Blitzer from the 76ers and the New Jersey Devils. So they all know a thing or two about sports. Gary Cohn, who you probably remember as the part of the Trump administration and also former president of Goldman Sachs. He's a former winner.
He is, right?
He's back in, yeah.
Okay.
Yeah.
Some scores real quick. David Einhorn, well, we're just one day
Yes,
in. So
not even a full day in.
Doesn't even matter, right?
Right.
David Einhorn is tied for first with 15 others, and they have 8. Bill Ackman is in last place along with 2 others. David Solomon, Tony Ressler as well.
Yeah.
They're 0. Right now, just in the first day.
Well, what's cool, and obviously it's very early days, what's cool is the tournament goes on, you can, this amazing graphic that our team has built here at Bloomberg, you can see kind of how it can go for certain people because it sort of reds out. If you lose, then you can see it's like, oh, this guy's in trouble. And let me tell you, as you guys can probably appreciate,
They get competitive.
there's some trash talking.
I have to say, I used to sit next to Jason, and like he'd be like, I don't believe, like they all wanted to know, right, kind of where they were doing, how they were doing.
Oh yeah, and they'll start. I mean, Tim, you'll love this. Like they'll start over the weekends, like sending me emails to say, like, I did the math, and it looks like if this happens and this happens, then I'm gonna beat this guy. I mean, or I'm gonna win, or I'm gonna come in third. And listen, I mean, from the charitable perspective, this is huge because, so Jenny Johnson of Franklin Templeton, or Franklin Resources, she won last year, first time in the competition. She won it all. Wow. $250,000 plus to Girls Who Invest. I mean,
So great.
So,
Really cool.
I mean, and that's real
It's real
money.
money. It's real money.
And one thing I should add from a charitable perspective, this year we asked, and many of our participants have already done this, they're making $2,022 contributions to World Central Kitchen, which obviously Bloomberg works with very closely.
Yep.
And they're helping feed a lot of the refugees around the Ukrainian conflict.
Yeah, I do also wonder, like, I remember, because you guys did this during the pandemic.
Yes.
But it was obviously a little bit different.
It was a little bit different. I mean, that was one where, back in 2020, the tournament was actually canceled.
Right.
And so we went to this same group, so there was nothing to bet on, and basically they just all made donations. We picked
really
three different charities that Bloomberg had vetted. I got to tell you, people love this, and a couple months before the tournament even starts, I start getting emails saying, we're doing this again, right? Like, what are we doing? How am I going to do it? I really want to beat this guy, or I want to defend my title, whatever it's going to be. So,
I
yeah.
want to know
Just
how some of these folks are actually choosing their brackets, because I imagine there's some serious research and perhaps maybe some analytics going into it, some quants.
I'm glad you said that because it's so fascinating, because I have had a chance to talk to a lot of them, how they do it. Some of them will assign several analysts to do a bottoms up kind of analysis of it. There's some quant, there's some AI that's involved with some of them as well. Some of them are just picking it, some of them hand it off to their kids. It's
like Joe, Jane, could you just come to the boss's office? We have an important assignment.
Oh yeah, that's exactly how it happens. And like there are criteria where it says, you're responsible for this region, but you can't have your alma mater in that region. And yeah, it's serious. This is serious business.
So how close is it right now?
It's very close right now, just because it's so early.
Yeah.
There'll be a little bit of
You
separation.
can tell I'm following it really closely.
It's the first day.
Come on, Carol, how's your bracket?
I've been watching kind of what's going on in the world.
Yeah, exactly. But yeah, after this weekend, there'll be a little bit of separation, and then certainly after next weekend.
More women, though, getting involved.
More women getting involved. Kristen Lemkow, we have our first brother-sister showdown. Greg Lemkow and Kristen Lemkow. First time we've ever had that, so keep an eye on that.
Could be a little ugly come Thanksgiving.
Kristen's she's 4 for 4 right now.
Gotta love it. Jason Kelly.
So is Greg.
Good luck. We look forward to hearing more, and we'll watch it on the terminal. Certainly track it. Jason Kelly, chief correspondent at Bloomberg Quick Take, joining us here in studio.
Well, let's get to Washington, D.C. for a check of latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. Secretary of State Antony Blinken says Russian President Vladimir Putin may be growing more desperate as his invasion falters in Ukraine. And the U.S. fears Putin could be setting the stage for a chemical weapons attack that he would blame on Ukraine. Blinken says it's clear Putin is not abiding by the rules of war, and he referenced numerous attacks on civilians.
Yesterday, President Biden said that, in his opinion, war crimes have been committed in Ukraine. Personally, I agree. Intentionally targeting civilians is a war crime. After all the destruction of the past 3 weeks, I find it difficult to conclude that the Russians are doing otherwise.
Blinken says the U.S. will assist in the investigation into those apparent war crimes. Changes are underway on President Biden's COVID-19 response team. We get more on that from Bloomberg's Nathan Hager.
The White House says Jeffrey Zients will be leaving next month as White House Coronavirus Response Coordinator. He'll be replaced by Dr. Ashish Jha, the Dean of the Brown University School of Public Health. Zients spent much of his 14 months on the job securing purchases and distribution of vaccines, treatments, tests, and protective equipment against COVID. President Biden says Dr. Jha will be tasked with helping schools and workplaces cope with the virus, as well as preparing for possible future waves and variants of COVID-19. In Washington, I'm Nathan Hager, Bloomberg Radio.
For those of you experiencing March Madness, first-round action is underway in the NCAA men's basketball tournament. 16 games were on today's schedule. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, talking a little bit of March Madness, just like we did with Brackets for a Cause with our own Jason Kelly. Hey, folks, just a little bit of serious stuff I want to get to because this did cross just a little while ago. President Vladimir Putin can be expected to brandish threats to use nuclear weapons against the West if stiff Ukrainian resistance to Russia's invasion continues, draining conventional manpower and equipment. This is according to a new assessment by the Pentagon's Defense Intelligence Agency. Protracted occupation of parts of Ukraine territory threatens to sap Russian military manpower and reduce their modernized weapons arsenal, while consequent economic sanctions will probably throw Russia into prolonged economic depression and diplomatic isolation. This is coming from the Lieutenant General Scott Barrier. He's director of the Defense Intelligence Agency. He put this out in a new 67-page summary of worldwide threats.
The combination of Ukraine's defiance and economic sanctions will threaten Russia's, quote, ability to produce modern precision-guided munitions, Barrier said in a statement prepared for the House Armed Services Committee. He continued, though, quote, as the war and its consequences slowly weaken Russian conventional strength, Russia will likely increasingly rely on its nuclear deterrent to signal the West and project strength to its internal and external audiences.
We should point out that Putin has already announced that he's put Russia's nuclear arsenal on a state of higher alert. All right, so that's where we are, and of course, all eyes are on what's going on in terms of the war in Ukraine and Russian reaction, continued reaction to that. In the meantime, just did want to mention a story that definitely caught our attention. Alex Milson on Bloomberg, a huge fire at a Walmart distribution center in Plainfield, Indiana, emitted a plume of smoke so vast that it could be seen from space. The billowing black smoke could be seen for miles around the 1.2 million square feet site and was picked up by a weather satellite as hundreds of firefighters tackled the blaze. For those who are watching on YouTube, you can see some of the pictures of the fire on the ground.
24 fire departments have banded together to fight the fire. That's according to a tweet from the Plainfield Fire Territory account. They said that they're thankful to local emergency crews for their quick response, for helping us account for the safety of our associates and those at the facility. That's what Walmart said in a statement.
Yeah, but amazing that you can see it. No doubt about it. It's so huge from space. All right, you're listening to Bloomberg, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. FedEx shares now little changed after reporting and posting a quarterly profit that was below analysts' expectations. Rising costs relating to the U.S. labor shortage and lower than expected package volume dragged on gains from pricing increases. Again, FedEx after earnings unchanged. GameStop shares now down by 6.5%. GameStop reported a surprise loss during the holiday quarter. Also says it will launch a marketplace for non-fungible tokens by the end of the second quarter of fiscal 2022. Stocks higher today with the S&P notching its biggest three-day rally since November of 2020. S&P up 53, a gain of 1.2%. The Dow up 417, up by 1.2%. NASDAQ up 178, a gain there of 1.3%. Stocks did close at session highs. 10-year yield 2.16%. Spot gold up 0.8%, 1941.71 the ounce. West Texas Intermediate crude up 9.1%, 103.70 a barrel on WTI. Recapping, stocks rally. S&P up another 53 today, up 1.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, our next guest is an entrepreneur in every sense of the word. He once ran his apparel operation out of his mother's basement, but it is a lot more today. Now, Damon John is the CEO of a multi-billion-dollar lifestyle brand. He founded FUBU. He's also CEO of the marketing firm, The Shark Group. He's one of the judges on ABC's long-running series, Shark Tank. He's a best-selling author, and his latest venture really combining his love of board games and game shows by backing a new interactive streaming platform called GameStar Plus.
Damon John is founder and CEO of FUBU, and among many other things. He joins us on the phone from Miami. Damon, it's good to chat with you again. How are you?
Oh, it's great chatting with you as always. I'm great.
Good, good. Hey, let's get into what was appealing to you about GameStar Plus. It's a mix of a physical board game, next generation app. You got IoT tech in there. Is this the metaverse?
You know, I think it is. I think everything's going to be in the metaverse. But I guess the simplest way to say it for all the listeners is kind of like Netflix for game night. And me being a huge lover of games, and I think board games. I think through this last 2 years, all of us have picked up some of that old love for board games. This was just a new delivery, a form of delivery of board games, and that's why I thought it was an absolutely amazing investment.
So, all right, you made an investment. Like, where's it going to go? Tell us how it's going to play out here. I'm thinking about our audience, they're investors, and trying to understand, and as the technological world continues to really evolve, where do you see this all going?
Well, I think that more people are going to start living in the metaverse and or, online and doing what they're doing, but you're bringing the simplicity of game night like a Netflix. And I think that for the initial customer, we're launching, we already launched Family Feud, really great IP. You have obviously Steve Harvey there. After that, we have Seen It with Mario Lopez and Jeopardy with Ken Jennings, The Wheel of Fortune, and there's so many more slated. These are all titles that people really love. You average out about anywhere from $15 to $20 for a game, but this is a subscription of about $3.99 a month, and you're going to get tons of games. And this is definitely something that I think some of the streamers are going to want to acquire down the road because they need to get more eyeballs and keep more stickiness on their platforms. And I think this is a way to do this without having to compete for more content from other streamers.
So talk to us about this platform. You mentioned Family Feud, that it is out there and it's streaming. So how many consumers are using it? What's the stickiness of someone who signs on and then stays with it?
Well, it's too early to tell the stickiness because we just launched it, and you can go to Target.com and get it, or go into Target because there are some physical components to the game, some cards you may want to have, but it's a little too early to look at that. And listen, after being on Shark Tank every year, seeing people tell me how they're going to do $1 gajillion in the first week, I tend not to give estimates like that.
How about half a gajillion? Do you think it could be half a gajillion?
Yeah, I like the fundamentals of knowing the IPs there, knowing the celebrities there, knowing my reach is there, knowing people are moving towards streaming in all different forms, knowing the metaverse is coming around. I like all the different things that are in position for success.
So is the game right now, Damon, is it one that's meant to be played when people are physically together, or is it to the point now where you can actually play with people who are not in the same space as you and you do this over the internet?
Well, right now it's going to be physically together, but it's going to grow to that. I mean, there are games that exist and apps that exist. They're all separate that obviously you can play separately. You know, that's nothing new. But right now it's physically in the home because then you'll be able to stream all the games to that home. And the physical components are there too, a couple of those pieces. So right now you need to be in the same household.
Hey, Damon, you know, as you guys build this out, content, and we see it with the streaming services, but that's going to be true for this platform as well. Is it fair to say that it's going to, you know, there's going to be maybe as you guys build it out and add content in terms of profitability, it may take a little while?
I would say so, but you know, listen, the two founders come from both the board game, from the gaming world and from the licensing world. I think that there's going to just be a lot of massive IP there. And, you know, if I would have, you know, we already saw this, you know, years ago. We thought that Netflix was something wasn't going to happen. Now you have Hulu, Netflix, and all these type of things. I think this is going to be the new norm.
What other titles are you thinking of? You mentioned that you have seen it with Mario Lopez, Jeopardy with Ken Jennings, you know, Wheel of Fortune coming. You already have Family Feud out. How else are you thinking about? I don't want to call it content necessarily. It is content, but it's kind of it's a little different in the sense of like, you know, it's interactive.
Well, we're looking at all IPs. You know, one of my favorite IPs is Monopoly, of course, but you know, Deal or No Deal, or you know, The Price is Right, Pyramid. You know, I think all of these IPs are going to be on there.
What's the acquisition process for getting that intellectual property? Like, is it really tough to get Monopoly?
It is really, well, it's somewhat tough, but you have people like myself, Steve Harvey, the great founders who worked over at Sony and various other places. We all have, you know, the right connections at Mattel and Hasbro, and I think that they're always trying to expand their IP and put it in different hands as well. So I don't think this one is going to be as challenging because we're kind of like in that blue ocean space with this, and there's not too many other competitors in this area delivering it on the same platform. So I think it's going to be fairly easy.
Well, what's interesting too, this whole idea of family game night, right? That I think about in terms of your potential audience has to make it even more attractive.
Yeah, because listen, you have 3 to 4 generations that can live in a household and still all love and value the same game. I mean, when we think about all the shows that are on Wheel of Fortune, Jeopardy, and all these shows that are still on there. Listen, I just did Celebrity Family Feud the other day, and it brought me back to my childhood. I haven't watched Family Feud in a long time, and I had the most amazing time. And I think that when you're bringing families around where all of them can appreciate these legendary IPs, these legendary games, I think it will be a new boost to the gaming market in this sense, to the board game market.
Hey, Damon, I got to ask, a couple days ago, you conducted a conversation with Facebook, formerly Facebook, now Meta, founder Mark Zuckerberg, where he really talked about his vision for the metaverse. We talk a lot about Facebook. The company's stock is down about 45% since its highs back in September. What was the vision that he laid out for the metaverse to you and at South by Southwest?
Fascinating conversation with him, and I got to more of the human aspect of him. We did go through some of the technical aspects, but you know, when I asked him questions, he sounded like that bright young customer-obsessed entrepreneur that just wants to help and change people's lives. And I think that as he was talking about the metaverse and all the things it'll bring, he was looking for more creators and entrepreneurs to really define what it is. I mean, today it's kind of like where we had the iPhone 1. You know, that's where it's really at today. But, I mean, some of the things we were talking about, how people who are, you know, maybe in a wheelchair can now dance and sing and swim, and more mature people can have that first date again with their wife. That obviously brought joy to me. But talking about how we're working, you know, I'm questioning myself: should I open an office again? Half my employees don't want to work, don't want to work in office. Half do want to come in. Now there's a medium.
Damon, we got to run. So nice to check in with you, Damon John over at FUBU, and of course his latest investments. For Tim Stanovic, I'm Carol Master. Have a safe evening.